that despite attempts to deploy the electronic dividend mandate management system, investors have continued to complain about delayed e-dividend payments and the time-consuming manual method, among other issues. In a communique signed by Lamido Yuguda, the Director General of the Securities and Exchange Commission, at the second Capital Market Committee meeting for the year, the Commission would, however, continue to create awareness in this regard. The African Development Bank Group has launched preparations for a new 10-year strategy, 2023 to 2032, which will supersede its current strategy of 2013 to 2022, the lender said in the statement. According to the statement, the next 10-year strategy is expected to provide a vision for how the bank plans to build on its significant achievements over the last decade to accelerate Africa's inclusive, green, and resilient growth, as well as development. All right, that's it for the business news. Let's quickly take a break at this time. And when we return, I'll be taking you through a very brisk market action. There's market analysis for today as well as for yesterday, today. That will be after the break. Don't forget to join us on all our social media platforms. We'll be right back.
Do you want to live your life financially free? Do you want to take your business to the next level and succeed? Buja, time 10 a.m. to 4 p.m. To register. For more inquiries and sponsorships, contact 0814-833-9088 or 0906-691-2600 and info@moneylinewithnancy.com. Don't miss this opportunity to greatness.
All right, so welcome back. Let's quickly take you through the market actions. We witnessed a sell-off in the shares of many blue chip companies, particularly NGX Group and African Prudential, and that dragged down transactions on the Nigerian Exchange Limited yesterday as market capitalization fell by 14 billion naira to close at 26.6 trillion naira, while we also saw that the All-Share Index was down by 5 basis points at the close of trading on Monday. Investors traded about 122.93 million ordinary shares worth about 1.3 billion naira in about 3,915 transactions. We saw that despite the buy interest in Zenith Bank, ETI and UBA influencing the slight pullback, volume and value traded fell by about 7.18% and 19.97% respectively. The most traded stocks by volume were Mutual Benefit, Transcorp, GTCO, while the most valuable stocks on Monday were MTN Nigeria, GTCO, as well as Zenith Bank. Now, if we move over to other markets, the market diary now. Interbank rates in the money markets were hovering around the upper band levels, indicating that liquidity in the system is still fragile. The open buyback rate fell by 17 basis points to 14.5%, while the overnight rate remained unchanged at 15 basis points. While the Treasury bills market was relatively quiet, with interest noted across tenors on Monday, nevertheless, we saw the average benchmark yield standing at 8.06%. In the Treasury space, the market quietness is still expected to last into today's session. If we move over to the local bond market, yesterday it was relatively quiet also, with only minor sell interest observed on the 2025 and 2028 maturities. For the Eurobond market, it began the week bearish, with sell interest persisting across maturities. If we move over to the foreign exchange market, the US dollar traded at 429 for 3 kobo against $1. That's against the greenback. Now let's move over to other markets very quickly. Can we see Africa very quickly and see how South Africa, Kenya, and co are that stocks had their worst day since June, and Wall Street summer rally faded amid mounting rate hike fears. Let's move to Europe. You can see a sea of red on Wall Street. If we take a look at Europe, markets were relatively flat this Tuesday morning as investors digested a rise in oil prices and new Eurozone economic data. Let's move over to the Asian folks, where we saw that markets retreated this Tuesday. That's overnight while we're still sleeping. Asian folks were trading, and that retreat followed Wall Street's lead after U.S. stocks closed out their worst session since June on Monday, amid mounting concerns about the Federal Reserve's more aggressive monetary policy tightening. Let's take a look at commodities and see how Brent crude is trading. All prices rose slightly this Tuesday after Saudi Arabia warned that OPEC might reduce output to correct a recent drop in oil futures. After a volatile session on Monday, Brent crude rose to about $96.80 a barrel. U.S. West Texas Intermediate crude was at $90.73 a barrel in early trade this morning. So natural gas is trading less than $10. Gold is doing $1,737 an ounce. Cocoa is trading at the upper band of $2,000. Palm oil is over $4,000, just slightly. Wheat is doing $786 US dollars. We do know what's happening in Russia and Ukraine, and that is also impacting the prices of food and cereals in the rest of the world. Over there, you can see that all prices at around 96, 97 US dollars, but Nigeria is really not reaping the benefit of the increase we've seen in the last few months, and is really a very sad one. Not just only sad, but upsetting for us as a country, because I think this is the first time that we will not be reaping the gains of being an oil-producing country. We are not reaping as a result of the price, and we're not reaping even as a result of all production volume. All right, let's quickly take a break, and when we return, it will be time for me to start my conversation with Shubham Chowdhury, who is the World Bank Country Director. We'll be looking at Nigeria's economic problems, and perhaps is the World Bank doing anything to get us out of this? We'll be right back.
Do you want to live your life financially free? Do you want to take your business to the next level and succeed? Then the time is now. Moneyline with Nancy on AIT presents the Personal and Business Acceleration Masterclass, a live conference geared at revealing top secrets by elite business experts and life coaches in Nigeria on ways to improve yourself, business, and create wealth. Date, Saturday 17 September 2022. Venue, Nigerian Export Promotion Council, Plot 424. Agunyi Ronsi Street, Maitama, Abuja. Time, 10 a.m. to 4 p.m. To register. For more inquiries and sponsorships, contact 0814-833-9088 or 0906-691-2600 and info@moneylinewithnancy.com. Don't miss this opportunity to greatness.
All right, welcome back to the program. Shubham Shadur is joining me right now. He's the World Bank country, and welcome to the show.
Good morning, Nancy. Thank you.
Good morning. How are you doing?
I'm doing well.
Doing well. Okay. I don't know if the majority of Nigerians are not doing well at this point.
Well, I'm always optimistic. I look forward. It's all about what can we do to make things better.
What can we do to make things better? Do you see a semblance of that we're trying to do things better?
I think the efforts are there. The fruits of those efforts perhaps are still to be realized, but look, we have to keep trying. Nigeria right now is in a difficult spot, and I think it's everyone from government, the political leaders, and ordinary citizens, the business elites. Everyone has to really come together to kind of say, okay, what do we need to do to get Nigeria back on an upward trajectory to realizing its potential?
How difficult do you think the situation is at this point? Because at the last NDU in June, which was about 2 months ago, a picture, a very, gory picture was painted. In fact, the NDU's title was Continuing Urgency of Business Unusual. The previous one, which was in November of 2021, was Time for Business Unusual. And you released, there's a continuing urgency. That means that there was really nothing that was done or little efforts done between November 2021 and June of 2022. Now, between that June of 2022 and now, how difficult is it for us as a country? And I chose my words specifically and deliberate with that question.
Okay. So, Nancy, I think I have to say frankly that things have not been easy. Even in the last 2 months, if you just look at what's been happening in the global economy. So Nigeria is within a broader global context. And so Nigeria has challenges that it faces, that it has to solve. But and that requires both the kind of the will and the focus in country, but it's also made more or less difficult by what's happening externally. So what's happened externally in the last 2 months, frankly, has not helped. So if we said that back in June, the continuing urgency of business unusual, I think that continues. That continues, and on multiple fronts, in some ways the urgency has increased because the window to act may be shrinking.
The window to act may be shrinking. I'll come back to that in a bit. Earlier on, you did say that the efforts are being put together by those in government and all of that. Can you just give me a hint, not a total picture really, a hint of your engagements with those that are managing the economy? I know you meet with the central bank governor, you meet with the Minister of Finance, and some others with those in charge of managing our economy. What is the sense you get from these meetings, really, even with the Vice President? What are the kind of conversations that go on?
I think it's mostly, the basic challenges that Nigeria is facing. First and foremost, we've been saying it, and I think you mentioned this in your earlier segment, oil prices are now, if not at historic highs, much, much higher than they were a year ago, or certainly than they were 2 years ago. Yet, for the first time in Nigeria's history, the fact that oil prices have gone up is turning out to be a net negative for Nigeria in fiscal terms. So as oil prices are going up, instead of Nigeria enjoying the government having additional revenues that it can direct towards meeting the challenges of ordinary Nigerians, it's finding that it's running out of money. And you heard the Honorable Minister of Finance, I think about a month ago, when she presented the medium-term expenditure framework. So I think that's foremost on everyone's mind. And part of it, it's very simple, that when oil prices go up, for Nigeria to benefit, oil revenues have to go up, which means oil production either goes up or at least doesn't fall. And yet, what has happened is that oil production has been stagnating or even falling. And it's not just oil production, but oil sales, because of the problem of diversion and theft, between the wellhead and the export jetties. So that's happening in terms of where Nigeria should be benefiting. It's not benefiting as much. And on the other side, because of the continuing PMS subsidies, those have continued to increase, and they've become more expensive, because if you have to import petroleum, or just the global price of petroleum has gone up, so the fiscal burden of those have gone up. So what you're seeing is, on the upside, things not going up as much, but on the downside, in terms of the cost to the economy, cost to the government, that's just blowing up massively. So that's a big preoccupation. The other is, of course, this puts pressure on the availability of foreign exchange. And that too has become something that, because if oil sales are not as high as they could be or ought to be, foreign exchange coming in has also diminished.
Okay, I don't know if I still got a sense from the question I asked in terms of the kind of conversations you've been having with those in the positions, those that are vested with managing the economy.
So I would say there's one which we've been saying for a long time, I think going back to at least a year or more, which is Nigeria has the choice of whether or not using scarce fiscal resources for PMS subsidies that do not primarily benefit the majority of Nigerians, but really, I'm not saying that PMS subsidies don't, they affect the price at which people can buy PMS, sure. But other than that, the bulk of the benefit is going to the top of the income distribution. And that's a fundamental choice. And it's a matter of how to at least have a conversation, explore options for timing of when PMS subsidies might be rolled back. What could the government do to compensate, to cushion ordinary Nigerians from any, say, if prices go up even further than they have, how could ordinary Nigerians be helped by government? More importantly, having a conversation about, this year, probably close to 5 trillion, maybe more, will go towards PMS subsidies, to think about how can the government really commit to ordinary Nigerians that 5 trillion, if it's taken away from PMS subsidies, will be used in ways that directly benefit ordinary Nigerians by making sure primary healthcare facilities have medicine or so. So that's been part of the conversation, but recognizing that this is a very, something that there needs to be a consensus on, may not happen. So a lot of the other conversation has also been how else can Nigeria, the government, raise more revenues? Okay, so non-oil sources of revenues. So whether it's through things like, I think at the National Council of Health, there was a discussion back some 3 months ago, discussion of the potential for sin taxes, taxes on cigarettes, alcohol, sugar-sweetened beverages. Those taxes in Nigeria are lower than they are anywhere else. Okay, for a variety of historical reasons, but there's a potential opportunity there to increase them. You mentioned about the waivers that Customs was providing, to take a look at those, to really interrogate those and say, look, are these waivers for the right reasons, or are they still relevant? Same thing with tax expenditures. Often firms and businesses get incentives, meaning tax incentives, because they might be in a pioneer industry. So are those still relevant, or are there ways in which those incentives could be sunsetted? So those are the kinds of discussions that within the government are being had. And we're trying to provide support in terms of, what is the global experience elsewhere, what technical analysis, things of that nature. Okay,
so what exactly could be the body language when you're having these conversations? Because I know since the last NDU, so much was talked about subsidy, just like you said. The World Bank did say, I think, about 4 trillion naira or so subsidy. IMF, I think 2 weeks later or 3 weeks later, said about 5 trillion or even 6 trillion. And the president, just some weeks after all of that, said, no, guys, it's going to be difficult at this point. So if you're in the room with these people, what's the sense of the body language? And I know why I'm asking that question, in the sense that are they looking at these kind of reforms? If now the president has said we're not going to do subsidy removal at this point because it's going to be difficult on Nigerians, are there other policy options even beyond what you've mentioned in terms of sugar taxes, which the Minister of Finance has also spoken about, and some other taxes even on telecoms, data, and all of that? What's the sense, really, that is it about, oh, these World Bank guys have come again, no, we're not going to listen to you guys, and we're going to do our Nigerianized, or have our own Nigerianized solutions?
Yeah. No, I would say, and look, this really is something to be asked of the government principles you're talking about. But look, my sense, and from all the conversations we've had and the meetings, is really that there's a recognition that there is a choice, that at some point PMS subsidies cannot be sustained because there's so many other needs, very pressing needs that will directly benefit the people. I think it's a question of when and how. Okay, it's a question of when and how, and I think even recently you heard that there are discussions now of perhaps sometime next year PMS subsidies being removed. I think the real it has to be a conversation not really between government and us. We're here to support Nigeria, but we're international partners. It has to be a conversation between government and the people. Because this has to be a consensus amongst all stakeholders.
Okay, let's take a look at some macroeconomic situations which we're facing. Of course, you've spoken about the lower revenues which we are getting. Which other macroeconomic situation are we really facing that is dire at this point? And how do, okay, are we really facing that? We'll take it, perhaps recommendations on how we can fix them.
Yeah. So I think the three that we highlighted in the June Nigeria Development Update remain. One is inflation. And in fact, the latest numbers you will have seen from the Nigerian Bureau of Statistics, headline inflation and with it food price inflation has again gone up year on year. And I think headline inflation is now at the highest it's been in 5 years. And that's actually where I see it in terms of how it's affecting people on a daily basis, that people are finding it really difficult to meet even basic needs. So that's one. Second is the fiscal that we've just talked about, the fact that the government will run out of money, will not have enough money to meet basic needs, pay salaries, etc. And third is really the access to foreign exchange, that if will Nigeria's reserves, will Nigeria have enough foreign currency reserves, again, to meet the economy's needs? Because every economy, no economy is autarkic, can produce everything it consumes, right? So there will always be a need for imports. The question is, will Nigeria have enough? And so far, at least if you look at the numbers, you know, gross reserves are still about 39 billion. The thing that I would draw attention to is, you know, gross reserves in June of 2021 were about 39 billion. Gross reserves today are about 39 billion. In the meantime, though, and this goes back to the point I was making earlier, oil prices have gone up by about $40 a barrel. Okay, and if you just multiply $40 a barrel times
production volume
1.3,
yeah,
that should be an increment in reserves, at least some fraction of it. You get about, maybe if you just did $40 a barrel times 1.2, 1.3, not the OPEC quota,
yes,
but just
so
what is
the
being,
one we can produce.
you know, it works out to about $20 billion over the 12 months. Now, all of that obviously is not going to come in the form of, you know, foreign currency inflows, but $20 billion, even if you have that, is a substantial amount. So, you know, the fact that that hasn't happened and there continues to be real pressures, and you see this in the gap between the INE, the official exchange rate, and the parallel market rate. Now, the parallel market rate, maybe, I think it's probably overblown, but it's a signal of
the June edition. But I just want to take you back again to the issue of the PMS subsidy, which you mentioned, because since when you released this, between then and now, we've seen the NNPC transition into a company. What is the World Bank thinking about that? Because we've seen it now commercialized. It's now, you know, it's not, okay, it's a company. Let me put it like that. It's commercialized now. It has its board and all of that. What do you think about that? Do you see the tides changing? Because in June, it wasn't there. Right. So I just needed to ask this question.
So I think in terms of that model, let's say the corporatization,
sure, yes,
of, in general, you know, that's anything that helps a company, a state-owned enterprise, operate more efficiently with a closer attention to the bottom line, I think can be a good thing. But it really depends on how it's actually implemented and whether, as a corporate, as NNPC Limited, you know, whether it actually delivers on what the hopes are, right? And I think that still remains to be seen. It's just been since July 1st, right? I think one of the things to ensure, even though it's NNPC Limited, it's going to operate as on a more commercial corporate basis. You know, the shareholders are still government, right? So there's still, and the whole idea is that instead of making it function like a normal MDA or ministry, the idea can function more as a firm. That's great, but then it actually has to deliver on that, has to be efficiently operate. And in terms of revenues flowing in, NNPC now will, a lot of the revenues it gets on, you know, as earned profits, if you like, are going to be transmitted as profits rather than the monthly transfers to Federation account. At this point in time, there may be some uncertainty about, look, exactly what are the volumes of those, those profits, when will they be coming in? So just from even a cash flow perspective, I think it's something that needs to be tracked and monitored. That said, NNPC, even before it became NNPC Limited, was not transferring funds to the Federation account. So that's where the fiscal bind is going to be.
And the difference there is that, of course, it's going to have a P&L financial statements, perhaps a January to December financial statement period. So it's not about transferring money now monthly to the Federation account or FAC for them to share.
No, but you still have to make, corporations, you have to make quarterly payments, etc. It's not just at the end of the year. The other thing to say, under this corporatization happened under the Petroleum Industry Act, which also has lots of other provisions, and in fact the different upstream petroleum regulatory agency and the authority and the midstream and downstream are passing all these regulations. I think it's really worth taking a look at those regulations, because those will affect the governance as well as the fiscal implications of the Petroleum Industry Act. To what extent does the government have oversight of what's going on in the sector? So right now we've gone from a major milestone with the the passage of the petroleum, or enactment of the Petroleum Industry Act, to now paying attention to the implementation going forward, and the details will be important.
Okay, let's take a look at, still in this NDU, it was noted that the scale and scope of Nigeria's protectionist policies have increased significantly. Do you still feel, does the World Bank still feel the same way in terms of FX restrictions, import bans, border closure? I think we had a border closure in 2019, I guess, yes, and reopened January 2021. Do you still feel the same way, high tariffs and all of that? How has that also dampened Nigeria's economic growth? Though the government on its part will be like, okay, we needed to close the borders at that time. Part of the reasons then was about security, the inflow of people, terrorists and all of that into the country, and some other things that we also need to grow ourselves. We need to produce and also eat what we produce and all of that.
Right. No, I think certainly since the border closure in August of 2019, kind of some aspects of that have been eased, so that the borders are open, but they're still not back to kind of fully open, and there may be reasons for that. I think what we've been pointing out is the intentions we understand, embrace, support in terms of increasing domestic value added. The basic point is whether the border closure will actually, without changes happening domestically behind the borders, those intentions, those aims, those goals will be realized. And also to highlight some of the costs of the border closure. So let's take imports of rice. Okay, that made the price of rice went up. The price of foreign rice certainly went up, but if you look at what happened to price of domestic rice, the price of domestic rice also went up. And the production of domestic rice did not necessarily take off immediately, and you shouldn't expect to, because these are, the supply response from the domestic economy takes time. Okay, so it may yet happen. But in the interim, you had higher prices for rice, not really, and then still imports coming in, and domestic production not really picking up. And so all we've been saying is take a look at what are some of the other things that may need to be addressed for the basic aim, which we completely support, increasing domestic value added. For that basic aim to be realized, let's take a holistic look at it and actually fix the problems that are kind of holding Nigeria back. Okay,
let's talk about the latest issue about the World Bank SABA program, the State Action on Business Enabling Reforms program, the 750 million program that is expected to create about, I think, 21 million jobs. Dr. Jumoke Odewale,
So if I can start at a somewhat high level, which is no country has eliminated poverty without private investment and job creation, basically giving millions of people the opportunities for more, better paying, higher value added jobs, right? So what the SABRE program, the idea behind it is to say, look, what are all the things that states can do to actually make it easier for private businesses to set up, to grow, to create jobs, and kind of offer real economic opportunities for all the millions of young Nigerians, right? So what kinds of things? Land allocation, okay? Almost any business, especially if you're talking about an agribusiness, will require land. How can states, and states control that, so how can states make that easier? If you talk about realizing the potential of Nigeria as a digital economy. It all has to do with fixed broadband, laying fiber optic cables. So what can states do to make it more, easier for fiber optic cables to be laid by clarifying the regulations, the right-of-way fees. If you look at investment promotion, if you have firms that are willing to come into a state, make a large-scale investment, and they want kind of a one-stop shop to help them. So what this program does is try to replicate what the SIFTAS program did for fiscal management, which is to, basically reach almost like a mutual accountability agreement between the federal and the states, saying if the states are able to do X, Y, Z
yes.
to improve their fiscal management. That was SIFTAS.
Conditions. So
yeah. So in the case of SIFTAS, the previous program, it was about things that they could do to improve the transparency, accountability, and sustainability of of their fiscal management. With SABRE, very similar idea, except this is about ABC. What can the states do to improve the business enabling environment, and the results will be seen in terms of, okay, does this mean that they're able to attract more private investment? To, the costs of, the fiber optic, coverage, connectivity increases. Land is allocated more transparently. More certificates of occupancy are issued, including to female entrepreneurs, right?
Yeah.
So that's the idea. We've been working on it for actually quite a bit of time with the states, with the Presidential Enabling Business Environment Council. We are now, the National Economic Council has approved it, the Nigeria Governors Forum, they formed a subcommittee, just as they did with SIFTAS, to make sure that the states understand what's expected of them, can learn from each other. We are aiming to present to our board at the end of September, and of course we're hoping that our board will endorse and approve the thing, and then the implementation will begin.
I'm just a bit curious and worried that this SABRE program might not likely go the way or would be better than the SIFTAS program, because I also know that some states, didn't make, there was a bit of conditions for the state to improve their transparency, accountability, and all of that. I don't know if, the states will really live up to expectations on this. And if there's like a monitoring and evaluation kind of mechanism from the World Bank to assist states with PEBEC at this time, to achieve the objective of this program.
So I think not all states may meet all of the targets, but that's part of the kind of the hard incentives come in, that if they don't meet the results,
they don't get it.
The disbursements don't occur, so they don't get the financing.
So for you to get the money, you've got to work for it.
You have to, and those have to be verified by an independent verification agent. But there's also what's nice about this is that the states that would like to meet the results but may need further support and, in terms of strengthening capacity, et cetera, they will get that additional support